All right, to continue the theme from this morning of regulation and policy, we have a great panel for you this afternoon, and I'm only going to introduce the moderator, which is Paul Brigner, and you can read his bio again in the program, but I will say this, that he just told me that if you read the bio, you'll see he worked at the Motion Picture was it MPAA, right? Motion Picture Association of America, and was a CTO type at the time, and during the Napster days, right? So imagine that. That was pretty interesting. So I probably got some great conversations over drinks later or something. But with that, let's welcome our panel.
Thank you, Kirk. Well, it's great to be here. And so, yes, I've experienced disruption before, and I guess I enjoyed that because here we are again, and I'm involved again with a great panel. And I want to introduce them quickly. On my right, your left, is Forrest Colyer. Forrest serves as a blockchain developer and solution architect within Deloitte's government and public services practice. In that role, Forrest has been a part of several blockchain projects during which he has helped shape clients' adoption strategies for blockchain, guided the design of blockchain solutions, and served as a developer during implementation. And we have John Jefferies. John is a serial security entrepreneur and chief marketing officer of CipherTrace. He's been marketing a broad spectrum of security products over 20 years, resulting in 6 successful exits. That's impressive. Before joining CipherTrace, John led blockchain initiatives at Samsung Strategy Innovation Center as head of security marketing for the IoT business unit. Then we have Lee A. Schneider. Lee serves as general counsel for Block.one with responsibility for all of the company's legal affairs, including its proactive regulatory and compliance initiatives. He led the blockchain practices at 2 major international firms, most recently McDermott, Will, and Emery. While at McDermott, he led both the fintech and broker-dealer practices. So glad to have such an outstanding panel here with us today. I think it's going to be a very interesting discussion, and my objective is to make it a discussion. And I think the best way to do that is to reflect on what we've heard today so far, which might help us all think about how we want this to proceed. So some of the things we've heard on stage today, well, all technology development and progress involves change and disruption. It also applies, that disruption also applies to policymakers and regulators as old laws are applied to new solutions or new situations. But what makes blockchain so challenging? Well, Senator Warner this morning kicked us off by expressing great optimism for the technology, but he also expressed concerns about the tech being used to create a shadow financial system. He is also concerned about the technology being used by Facebook to achieve world domination. Those aren't his words, I said that, but something like that is what he intended, I think. Well, my interpretation of what he said is that blockchain is transformational in ways that are truly unprecedented. Clearly, having founded a very successful tech company himself, Senator Warner is very smart about this, and his comments carry a lot of weight. Now let's reflect on Brendan's comments. Brendan talked about the vision for Block.one to bring the power of blockchain beyond the financial industry. He explained that because of blockchain, we are experiencing a new social movement, one that will allow people to see below the surface of how businesses operate. He says we are not just experiencing disruption, it is more appropriate to say that with blockchain, we are building a new foundation for society at large. In his words, we have the power to build systems that represent all of us. Then he talked a little bit about the role of policy and regulation at Block.one, which I thought was very fascinating. Do you recall how much of the company's initial budget was spent on legal and regulatory costs? That's right, 60%. That is unprecedented too. Why is that the case? Well, in America, as he described, we have a very consensus-driven and democratic system. It involves a literal regulatory soup of agencies that are trying to understand blockchain and work to clarify how old systems apply to new how old and sometimes new frameworks apply. So what is the right path forward? And this is where I thought Commissioner Peirce said something very interesting, that unlike the internet, this tech often falls under the jurisdiction of the SEC. So we just can't follow a do not harm approach like we did with the internet. So we have a little bit of a dilemma. What do we need from her perspective? We need open and technology neutral regulation to accommodate change. Now we have too many rules, and she thinks the industry needs policymakers to establish a safe harbor program for innovation. Well, based on my experience representing the industry at the Chamber of Digital Commerce, I have observed the federal government actively promoting some emerging technologies, and they're in a race to lead for the rest of the world. Unfortunately, the government is not including blockchain in these efforts. They're only, at present, including artificial intelligence, quantum computing, and 5G. So if blockchain is going to be the foundation of our society, as Brendan described, how can the US not promote blockchain? This makes no sense to me. So we need to work on this regulatory and policy environment. So with that, hopefully framing our discussion, I'd like to give each of our panelists a few minutes to give introductory remarks. And I'll start with Forrest, please.
Sure thing. So first of all, thank you very much for everyone for coming out and to this awesome event. I'm very excited as an alumni of Virginia Tech to be involved in blockchain as a subject matter at the university and in the greater community around the Blocksburg area. The place that I wanted to start is drawing attention to how far we've already come in terms of blockchain and how well understood it is in different places in the market. We've gone from 2017, where the ICO craze started to get people's eyes on the technology, whether that was all in a good context or some bad, obviously, when ICOs came and went. But now in 2019, we've seen attention being drawn to how powerful of a solution blockchain can be in enterprise, and how startups are starting to bring these products that they talked about in 2017 into market. You know, some have failed because they are startups at the end of the day. Blockchain does not mean that the normal statistics for how many startups fail versus how many succeed doesn't mean that those stats don't still ring true. But I also wanted to talk about how every year Deloitte goes and does a survey of different executives within Fortune 500 companies to evaluate their sentiment towards blockchain technology and their strategy and approach towards blockchain technology. So every year we can sort of see how things change as the regulatory climate starts to change, as technology solutions start to change. In this past year, in 2019, we saw that 80% of these executives from Fortune 500 companies were interested and saw a real high-value use case for blockchain within their business. And 50% of those executives also found that they are putting it in their top 5 strategic missions for the year. So moving forward, we're probably going to see a lot more action from these executives in trying to dig deep into the regulatory and policy situation that we have to start bringing those solutions to life and taking advantage of the benefits that blockchain can offer for those use cases. So I think, the industry, academia, and obviously lawmakers and regulators have a huge part to play in how valuable solutions using blockchain come to life in the future.
Thank you very much, Forrest. John, please.
Hi. Thank you. I'm John Jefferies. Thank you for inviting me. Thank you for having us here. Thank you for gathering. I think, that blockchain, in my view, is probably the most significant advance in IT since IP. And we can have that debate over cocktails if you want, but it's major, and it really is changing the way we approach the world, and especially in this world where things change without us knowing, like voting. It's important to know that things are immutable. And so at a fundamental layer, I think that it's really, really critical. Our personal business, we deal more on the asset side, so less on traditional kind of enterprise blockchain, but more on the asset side. And really, our vision is to make cryptocurrency and virtual assets safe, make sure, to help dispel some of these misconceptions about it being used primarily for terrorist financing and drug dealers and dark markets. And so what our company does is we actually do what we call cryptocurrency intelligence. We were originally funded by the DHS and by DARPA to really trace and track these drug dealers and terrorists. So what we do is it's great kind of academic stuff as well, because we have a team of machine learning experts and data scientists that are continually collecting and collating millions of pieces of data every week to try to determine the real world identities of entities, not necessarily people, but the actual business entities. So if you will, what we do is we create a yellow pages of the good and the bad stuff out there. And so based on that intelligence, we're able to create a series of solutions. So our original solution was focused on law enforcement. So DHS is one of our big customers, as well as law enforcement in 8 to 10 different nations across the globe. But really the anti-money laundering capabilities that our product offers has really been a boon to the industry and to our company. And that's really what will help grow the virtual asset industry to the multi-trillion-dollar industry it can be. At the same time, there's threats to different sort of entities that may or may not think they're doing business with blockchain entities. So we do a lot of work with the largest banks in the US and in Europe to identify cryptocurrencies interacting with their systems, to identify unlicensed money service businesses using their payment networks to process these payments. And quite frankly, there's a level of awareness that is just, it's not there. So one of the things we also do is we do a lot of training. We have a certification program, and we really try to help bring the education level up for both regulators and investigators and the industry, so they can really understand from a perspective of knowledge how clean and how safe crypto may or may not be. And just by way of regulation, and it's my personal feeling that without the support of regulators, the industry cannot flourish. And even if you're a traditional or more on the blockchain as opposed to the virtual asset side, it's critical that the virtual asset side gain their support, because without their support, the whole rest of the blockchain world suffers from that. So by way of example, I've done some analysis. My role is also chief financial analyst at CipherTrace, where I demonstrated that in environments and jurisdictions where they have strong regulatory environments and strong regulatory regimes, the amount of dirty crypto, dirty Bitcoin on these exchanges is 0.25%. And if you go outside of the US into less regulated worlds, it's 39 times higher. So one of the things, and I think we'll talk about later, is as we're seeing the globalization of anti-money laundering and regulation, it makes crypto much safer. And while it is a burden and it is a cost, the counter to that is, do you want some guy managing your money on a laptop?
Thank you very much, John. Appreciate that. Lee.
Thank you, Paul. Hi, everyone. Very nice to see everybody here. It's great. I really enjoy coming to these conferences because I always learn so much from the people that I talk with and from my fellow panelists. The thing that I always start out with saying is that we should just keep in mind that blockchain is a database technology. I think Brendan did a really nice job of explaining that earlier today, and that was one of the core insights that both Brendan and Dan had about blockchain and about the Bitcoin white paper when it came out. Why do I think that's so important? Well, we have databases in everyday life in so many different ways that we've probably lost track of what it means to know that there's a database and what it means for something to be digitally represented on a database. Think about the last time you shopped online. That's a completely different experience than going to a store and shopping. Let's take shoes for an example. When I go to the shoe store, I actually get to hold the shoes. I get to see what the tread looks like. I get to try them on, walk around the store. It's a very tangible experience. Versus when I do it online, I look at lots of digital representations of shoes and I try to figure out which ones are gonna fit best, look best, feel best, et cetera, et cetera. But we've gotten so used to shopping online that we think of that experience of shopping as being the same as shopping for shoes in the shoe store, right? It's just shopping for shoes. And yet there's a whole host of technologies involved, and a database is at the heart of those technologies. When I talk to regulators, policymakers, anybody, my mom about this technology, I try to draw people's attention to that basic fact, because the fact is that blockchain is a database technology, and it's a better database technology for a lot of reasons. It's not the database technology for every situation. But the other fact is that it's only a part of the tech stack. So there are a lot of other technologies that get used in conjunction with blockchain. And in fact, the great features of blockchain allow people to use these other technologies in more certain ways to accomplish what they're trying to accomplish. When I give all of that background to policymakers and regulators, I then tell them, look, blockchain is a technology. It creates a technology wrapper for something. But when we as lawyers think about things, we think about the legal wrapper around something. So think about a stock in a company, right? That's just a legal wrapper that we give to this idea that you can have an ownership interest in the company. That legal wrapper is not impacted by the technology wrapper that we use to represent stock in a company. Some of you, like me, with my gray hair, are old enough to remember when there were actual physical stock certificates that people had, pieces of paper, often very ornately designed, that evidenced your ownership of stock in a company. That was the height of technology for stock ownership for a while. We've slowly moved past that with all kinds of ledgers, including digital ledgers at DTC right now, where most stocks in the US are held. And hopefully we're going to move past that to a blockchain-based digital ledger, whether it's a centralized one or a decentralized one, whatever the case may be. But it's still going to represent stock. The technology that we use is not changing the legal wrapper, but rather it's enhancing our ability to keep track of the items. And that's true for intangible things like stocks. It's also true for tangible things like shoes, which will eventually get represented on blockchain databases so that when I shop for shoes online, I'll actually know that with certainty that I'm going to get the shoes that I expect. So that's the way that I try to approach the basic thinking from a legal and regulatory standpoint here, and the way that I try to communicate it with the people that I talk to.
Thank you very much. So excellent perspectives. I like some of the shoe use case you talked about. My son is here with me today, so he was telling me about this pair of Air Jordans that is apparently worth over $500 or something like that. I said, well, we need a blockchain for that. So I'm glad that you're working on that. You know,
I gave that as an example in a talk I gave to the CFTC Technology Advisory Committee on stablecoins. So stablecoins are a concept that people talk about a lot these days. Often they mean a blockchain token that represents a fiat currency. But again, depending on how you define stablecoin, right? Is it stable vis-a-vis a fiat currency, or is it stable vis-a-vis some other asset? That pair of Air Jordans, the blockchain token, could be the stablecoin representing that pair of Air Jordans.
There you
I
go.
use Yeezys as my example because I'm hip.
So, again, building off your comments about the wrapper, the technology wrapper, I think from a legal and policy perspective, what often makes this very complicated is the value that is represented there and the ability to trade that value so frictionlessly on a global network, right? So it's not all cryptocurrency, though. So I think just to start out, let's try to differentiate a little bit between cryptocurrency and other digital assets. So we hear about the distinctions between securities, commodities, and utilities, but that gets really convoluted in the case of blockchain and digital assets. So what are policymakers coming up with to understand the unique and sometimes dynamic nature of digital assets as it changes or has different characteristics like this?
I think that's an excellent question, Paul, and unfortunately, there's not a good, easy answer for it yet. As you heard from Commissioner Peirce, there's a very dynamic conversation happening at the SEC and between the SEC and other financial regulators. Let's remember the fellow right before lunch, John, gave that great presentation about all the healthcare use cases. I missed part of the presentation at the beginning, but I didn't see him talk about any crypto asset use cases for blockchain in that presentation. And yet, because it's all healthcare related, we know there's a huge amount of regulation related to the healthcare segment. And so how is that amount of healthcare regulation going to impact the blockchain use cases in the healthcare industry? That's going to be completely different than talking about whether or not, Bitcoin is a security, and if it is a security, having to comply with the securities laws versus it's a commodity, and then they've approved the commodities futures trading on Bitcoin and what that regulation looks like. My mantra here is let's look at the features and functions of the digital asset. So if it's just a digital record of, for example, someone's electronic health records or someone's informed consent, that's a very different thing than a digital asset that represents a real estate, a property. It's a very different thing than a digital asset that represents a masterpiece of art. And it's a still different thing than Ether, for example, which is sort of a digital asset that just gets used to pay people on the Ethereum blockchain. So without looking at the functions and features, we can talk sort of theoretically, but that's not the way regulation works, right? The legal wrapper, what's the legal wrapper? So what's the thing? Once we know what its functions and features are, we can give it a legal wrapper, and then we can figure out how it gets regulated, as opposed to saying, well, it's on blockchain, so it must be regulated by the SEC or something like that.
Thank you. Forrest and John, let's take a deeper look at digital assets that are not crypto assets. Could you give us some insight into those use cases and how companies are using blockchain databases?
Yeah, I can start that one off. I think that, at least for me, and I've noticed a lot in the industry, a really high value use case for blockchain in terms of an asset or a piece of information to track that is not a traditional, maybe within the SEC's purview, a digital asset like a cryptocurrency is your identity, right? So the ability to utilize some of the benefits that blockchain technology offers and create an environment on which individual can more or less own their own identity, right? They can make attestations on credentials they might have, as complicated as different degrees that they've earned from different universities, all the way down to really standard stuff like, license to drive a motor vehicle in their certain jurisdiction or locality. Because right now, people's identities are very fragmented across different agencies between federal, state, local, municipal governments, it gets very difficult to manage those processes. Like for me personally, going and trying to pull together all the documentation to go get the new Real ID so I can fly in 2020. There's a lot of different moving parts to that and a lot of agencies that I have to work with to do that. So blockchain has a lot of value there.
Go ahead.
Sure. In my experience, supply chain management is a very tricky thing. I once ran marketing for a company that did a very secure flash drive for the U.S. government. And if any of you are familiar with Stuxnet, you'll know the dangers that weak supply chains can induce. And I think that the real promise of the immutable blockchain is that you can track and trace all of the events that are associated with the production of a product, or in the case, I don't know if you're familiar with some of the issues with fishing, but apparently most of the fish that you think you're buying is a different breed. So things like that. The other thing that is of great concern is pharmaceuticals. So recently in a magazine I read, they had an article on heart pressure drugs. And apparently most of these drugs, or many of these drugs that were produced by a core manufacturer, had cancer-inducing agents in them. And they weren't able to track the ingredients and the methodologies back to that. So in my mind, supply chain management is one of the big obvious use cases. But there are also some other very interesting cases around pre-funding events, factory automation, logistics, and it's, as I said before, it's pretty fundamental if you want to make sure something hasn't changed.
Yeah, definitely. And I think pulling on that thread a little bit more, recently in the news you saw that there was a lot of debate about provenance of certain products and parts in manufacturing that go into, U.S. government machinery or U.S. government equipment, but also companies want to know where they're getting parts from. If you have a contractor selling you a part saying it's from the U.S. and it's made in the U.S., being able to track that back to the exact place and time that it was manufactured and maybe the parts that went into that piece as well. I think it's a huge use case value for blockchain technologies.
And I'm not going to add another use case, but all of the use cases we've talked about, blockchain is sort of at the core, but it's not the exclusive technology that's used. And that, again, gets back to the idea of this tech stack that's being built on and around blockchain and the creativity, if you will, that's been unleashed by blockchain because of the transparency, auditability, all of the positive features of blockchain databases. We now have all of these other technologies that are feeding the blockchain database, taking data from the blockchain database to create all of this cool stuff.
Definitely.
I think that's really a great introduction into the very dynamic nature of digital assets. It's truly amazing the different ways it can be used, and from a legal and policy perspective, that's very important to understand. There's another issue I'd like to have you comment on, in addition to that dynamic nature. Policymakers have been struggling with the decentralized and pseudonymous nature of cryptocurrency transactions. Much of the focus recently has been at the global level, where we are seeing coordination on ensuring global financial integrity, referring to the mechanisms that are used to stop money laundering and financing terrorist activities. John, this is, I think, right in your domain. So
Possibly, yes.
What are you seeing at the global level on this, and do you think these concerns can be addressed?
I would say these concerns are absolutely being addressed, and they're being addressed in a very imminent and high-speed manner. Most of the cryptocurrency industry is still largely in a state of denial about what is really going on with respect to regulation, but the most powerful agency you've never heard of is probably FATF. I'm not even going to ask for a call of hands because not too many of you, I'm sure, have heard of it. But the Financial Action Task Force is a government, or is a body of G20 nations that are in charge of setting regulatory guidelines for 37 of the G20 countries. In June of this year, they passed some guidance, not law, that has to be put into law by June of 2020, that states that when a cryptocurrency exchange or other so-called virtual asset service business exchanges more than 1,000 either euro or dollar between themselves, both entities must be in possession of the recipient and the sender's data, their account number, the amount, and they must exchange that data before they can exchange the funds. Now, the industry received guidance in February of this year that this was coming. They were in absolute denial that it was going to happen. They said it was going to kill us, it was going to crush us, and then it passed. So the reality is that in the next 9 months, at least within the G20 countries, that this regulatory curtain is going to fall. It not only applies to the data about the senders and the receivers, but it also applies to privacy coins. So privacy coins must be able to comply with these laws. If any of you are not familiar with privacy coins, I'm happy to chat later. It's probably not a conversation for this panel. But also there's services, so there's money mixing services. These services also need to comply with this. Now that is very, very imminent, but it's actually worse than that for the industry, at least in terms of compliance officers. So FinCEN has reiterated in May of this year, and just a couple weeks ago they said they're coming after the bad exchanges, that law has been in effect since 2013, but as of May of this year, they really, really mean it, and we expect some action to be taken within the U.S., and FinCEN extends its arm to so-called U.S. persons. So one of their biggest actions was against BTCE in Cyprus, where they took down an exchange that was a notorious money laundering site, and also a place where most of those who paid ransom, most of it went there. So right now we're seeing this regulatory curtain come down, and then on top of it, the EU has their AML Directive 5, which goes into effect in January of this year. Not quite as stringent as some of these rules, and it doesn't cover crypto to crypto, but it does cover the critical off-ramps. And so when we're looking at regulating, we're looking at the flow of funds, it's really essential to understand where things get on and off the virtual asset off-ramps, because you can't buy a Lambo with Monero. You need to get good cold cash, and that is a typical choke point that needs to be observed very closely.
And just to clarify, FinCEN, Financial Crimes Enforcement Network, inside
Correct.
the U.S. Department of Treasury, right?
Yes, sorry.
Okay, great. Just want to make sure we define all of these
Thanks.
terms, because it is an alphabet soup. How about using blockchain itself to resolve these issues? Are there standards in place, or I think you may have even proposed some of those at your organization?
Sure. So there's, within the travel rule, there's some of the privacy coins have capability to comply within them, but most of the blockchains themselves will not support these capabilities. So it'll have to be an additional layer or an alternate form to comply. So we're looking at different sort of alternate blockchains and even smart contract technology to comply.
And what Forrest said about identity use cases for blockchain, I think a lot of people, John, correct me if I'm wrong, are bullish on the idea that if you can have these good blockchain identity solutions, that you can solve some of the issues associated with the FATF rules and whatnot. By the way, everybody who's an advocate for privacy should be a little frightened by this, right? Because as John said, the sender and receiver exchange have to give each other information about the receiver and the sender, identity information about that. And so thinking about how privacy is maintained around that information, particularly when I may be a client of Coinbase and already gone through their KYC, but if the trade that I do ends up sending the cryptocurrency to Poloniex, another exchange, where I'm not a client, but John's the client there and he's the recipient of the Bitcoin, then all of a sudden Poloniex, which I have no relationship with, has my information, and Coinbase, which John may have no relationship with, has his information. So getting those privacy issues taken care of, I think is a big point.
Yeah, I would concur that privacy is huge, and I think, with respect to the travel rule, it needs to be addressed, and we're working on that, and we have some open source initiatives on that. And also, it would be one of my concerns around blockchain for identity. You definitely need to bake in the privacy, otherwise your PII will be out there for all to see.
Agreed, and I think that any of these types of solutions and the inevitability of these regulations that are coming where data needs to be shared via, due to the travel rule, I think need to come with cybersecurity standards for anyone dealing in cryptocurrency and being money transmitters for cryptocurrencies, so that we can be sure that regardless of where your transaction initiates and where it terminates, that both ends are going to do an adequate job of protecting your information and your trades, because those things do contain private information.
And we heard both Brendan and Commissioner Peirce talk about these issues earlier today. So a lot of people are thinking about these issues on a global basis.
And they extend, just belabor this point a little bit further, they extend beyond personal privacy as well, right? Where financial institutions themselves need financial privacy, right? If you're a hedge fund, you don't want your competitor knowing your every move, your tactics, and your strategies, right? So financial privacy should always be considered as we think about these laws and design these products.
Excellent, thank you. So changing gears just a little bit, Forrest, from an architect and developer perspective, I know yours is quite different than focusing completely on policy and regulation, but I think you do touch some of that from a standards point of view, right? Can you give us some insight into that? And then also you could follow on with any impact at the state level with regulations that you've experienced.
Yeah, certainly. So I think where I sit in the Government and Public Services Division within Deloitte, helping clients strategize blockchain solutions and then build, implement, and test those solutions, I think we have a very interesting connection point with regulators as it relates to government agencies running their own blockchain solutions. So while NIST, the National Institute of Standards and Technology, is not a regulator themselves, the standards that they create for the minimum security requirements and standards for technology solutions within the government and the broader private sector, those directly drive mandates that are part of FISMA, the Federal Information Security Management Act, and FIPS, Federal Information Processing Standards. So at the end of the day, when we're going to build these solutions, we have to look at the core cryptography that's being used in the blockchain protocols that we're proposing to use for these solutions. Deloitte's tech agnostic. We don't sit and settle on one protocol. So when we look at the solution, we're looking at what's the best protocol for the use case. But then we also have to think about those smaller pieces underneath that protocol's umbrella. So just to give you an example, the ECDSA, the elliptic curve signing algorithm that's used in Ethereum and a handful of other protocols, quite a few, is not necessarily supported under the standards that NIST has laid out for algorithms that you can use in solutions. So it's the SECP 256K1 algorithm. The R1 elliptic curve algorithm is allowed to be used within NIST standards, but it's still very murky. If you were to go and try and push a solution into operation in the government that uses the standard encryption algorithms or signing algorithms, et cetera, you're not positive whether or not that's going to pass that authorization process for them to operate. The same thing goes for hashing algorithms. There are a bunch of standards for those. Not all blockchain protocols support standard hashing algorithms that are accepted by NIST standards. And so companies, inclusive of EOS, started creating a little bit of modularity in their protocols to allow you to choose what different algorithms you want to use within your solution so that you can start to comply with some of these mandates if your solution is going to touch government information, government hands. And then going into states, it becomes a little even more complicated because while you may go to a state like Colorado that's relatively friendly towards blockchain applications and wants to catalyze that to start, and you start implementing there, as soon as you start to scale and you want to go broader, you have to really go state by state and figure out what their regulatory climate is for blockchain solutions and the subsequent information that's going to go on them, because every single state is different. And that is especially felt for exchanges where you have to go and get regulatory help for your money transmission, licensing, and all sorts of other things that differ greatly between different states. So it's a wild world out there.
I'm guessing you have a perspective on this, Lee.
Yeah, I was just going to add, so that's just the U.S., right?
Sure,
and
yeah.
so when Brendan says that we spend 60% of our budget on legal and regulatory stuff, it's because we are a global company, and trying to figure out what the rules and regulations are in just the developed countries is a massive undertaking, particularly when they keep changing, right? That's the other point here is a lot of this stuff is in flight all the time, and there's new pronouncements coming out from regulators all around the globe, from intergovernmental organizations like FATF and others, and trying to keep up with all of that and trying to chart the course so that you get the tech right, you get the regulation right, you get the user experience right. I mean, God forbid the users should actually be able to use this stuff after all of the regulation and technology, right? It's hugely complicated. It's also, I mean, for me, hugely fun because I get to sort of solve all these puzzles on a, I was going to say daily basis, maybe hourly basis is better.
Well, yeah, I think we raised a good question there. The global phenomenon, you're having to cross the world to make sure that you can launch your product. Who's doing it better? Are there any countries that are opening the door to you and making it easier? And on top of that, is there anything we can learn here in the U.S. that our policymakers and regulators could do?
I don't know that there's sort of one or a handful of countries that I would say are sort of the best at it. I was in Zurich over the summer visiting a bunch of folks there that I know, and I was telling everybody when I came back that it was a slice of blockchain heaven because regulators do seem to be positive on blockchain, and there's a very big blockchain community there. I know the same is true in Singapore. France is making a big push to be a place for blockchain business. And some of the other jurisdictions in Asia are as well. But a lot of countries are really trying to figure this out as they go. Japan is one example. They were actually one of the first countries to come out with regulations around trading crypto assets. That was in the spring of 2017. They've since updated those regulations and restructured their regulators, created a self-regulatory organization, and done a bunch of other things in Japan. And so, again, just trying to have to keep up with all of the different things that are happening in these different jurisdictions. There's no amazing place yet.
Yeah.
I'm sorry, Forrest, just one other quick point, which is, from the U.S. perspective, we have what I like to describe as regulatory overhang, in part because of the positions that the SEC has taken, in part because of FinCEN and FATF and anti-money laundering, but also in part because there's been a lot of sort of negativity just coming out of the U.S. government as a whole. Negativity towards Libra and negativity out of the Department of Treasury. So all of this negativity ends up giving this regulatory overhang in the U.S. that's not necessarily present in many other countries. And I think it's an issue for U.S. competitiveness and an issue for national security, I think, as well.
Yeah, I mean, I think it's very nuanced to that point, and I did want to throw a couple of other honorable mentions to a couple of other places, one being Malta. Malta has tried to lead the charge in coming up with frameworks for regulation and trying to be a place where blockchain and related technologies are catalyzed rather than questioned. And then beyond that, Estonia has taken the lead by example approach where they've decided we're going to make blockchain like our priority. So we're going to come up with e-citizenship and government services that are backed by blockchain. And even though not all of them have worked exactly how they would have wanted, it gives credence to the fact that it can be used for these purposes and it can be used now, and we don't have to sit and belabor the point over and over and over again before we start to put this stuff into practice.
Sure, I would concur. I think, Estonia, for those that don't know, they were patient zero in the global cyber war. And as a result of that, a lot of their IT infrastructure was wiped out, which caused them to be very early adopters of blockchain, so that never ever happened again. So they are certainly a bright spot in terms of not necessarily regulation, but in terms of mass adoption of cryptocurrency or of blockchain technology. One of the things we're seeing within cryptocurrency is sort of a race between it tends to be islands, but a race between Malta and Bermuda and others as they try to create what Hester was speaking about, which is a sandbox, right? And I think one of the dirty little secrets that no one talks about is a lot of these blockchain businesses have a hard time getting banked. And so the intent of these sandboxes is so that the regulators within those jurisdictions can demonstrate to the banking community that these cryptocurrency companies are in fact bankable and that they're not a high risk. And so we're seeing a lot of energy, and I think that's where the U.S. really needs to wake up, is that blockchain, as Lee indicated, moves at 1,000,000 miles an hour, and things happen by the hour, not by the day. And so the U.S. really needs to pick up the pace as various different jurisdictions start to eclipse us.
Echoing Forrest's point about the public sector use cases, I think that's really important, and John's point from Estonia, I think that's really important because when the public sector adopts blockchain for different things, it lessens the anxiety about the technology, it helps them learn about the technology, helps hopefully get governments and regulators comfortable with the technology. So I'm a big proponent of finding those government use cases, those public sector use cases. The European Union actually has a group within the European Commission that's pushing all different kinds of blockchain public sector use cases and pilot programs, which I think is a real positive.
Yeah, especially when I think there are a lot of agencies and governing bodies and regulatory bodies globally that are still struggling with agreeing on definitions for a lot of this stuff. I think the best way to define it is to understand it in practice within your own organization. And so that's why I think a lot of agencies are trying to practice this.
Well, I promised we were going to make this a discussion, and I want to fulfill that. So get your questions ready. I'm going to ask one more question, and then we'll come to the audience, and you'll have a chance to ask some questions. But I want to follow up on the negativity point, and Libra was mentioned. So it's really a blessing and the curse, I think, that the blockchain ecosystem has been pulled into this, and it, of course, validates much of what many people have been saying about blockchain and use of as a currency, and just how transformational it is that Facebook and others were working on Libra. But also it's wrapped it into a major techlash where a lot of the sentiment that is built up against Facebook is now coming towards the crypto industry, which is not the kind of attention we really wanted. So let's look at that, though, just from a bigger picture, because what we're really talking about there is stablecoins. It's creating a stable cryptocurrency that is made for, it's easier to use in transactions. A couple concerns that have been raised there is financial stability and monetary policy, just to name a few. There's many. So I want to get the panel's thoughts on this topic, and where do you see this headed? Are stablecoins good for us? And please.
So maybe I'll dive in first, and we'll see if the water's warm. I think a couple things about stablecoins. First, as I said at the beginning, it's really important to evaluate the functions and features of the particular stablecoin so that you understand what it is. When we're talking about stablecoins that are based on fiat currencies or have value that's linked to the value of a fiat currency, the use case would seem to be making payments easier. And I use payments, it could be payments for anything, obviously particularly payments on blockchain or through blockchain-based solutions. That's a big one. My own personal view is that there's going to be a US dollar central bank blockchain currency, and that's going to supplant most of the fiat-based stable coins. If the European Union is thinking about this, which they should be, they'll do the same thing. It will supplant a whole additional set of stable coins. The Chinese have already announced that they want to do a central bank blockchain currency for the yuan or the renminbi. And So I think that supplants most of the fiat currency-based stablecoins. What the implications of that are, I don't pretend to be enough of either macro or micro economist, notwithstanding that my undergraduate degree was in economics, to even venture a guess on that. I will say, and echoing something that Commissioner Pierce said, maybe in a slightly different way than she said it, the need for experimentation here seems to be fairly clear in my mind. We all saw the results of the financial crisis in 2007, 2008, the Great Recession that followed, the consolidation in the financial services industry that's been occurring over the period of the last probably 20 years or so. So doing some kind of experimentation here, it seems to me, is a good idea. Whether that experiment will completely replace the existing or disrupt the existing financial sector, I have no idea. But we have to be open to new ideas here, because we can't just be solving the problems of the last issue. We've got to be thinking about solutions that will stand the test of time.
I agree. I would say that, stability in value is core to cryptocurrencies and virtual assets being used as internet money. No one wants to be the guy that paid $25 million for a pizza, right? And so as long as Bitcoin keeps going up, no one's going to want to part with it. No one's going to want to buy coffee at Starbucks with it. So I think that's a critical element to making cryptocurrency and virtual assets usable on a day-to-day basis. That said, there's big differences, right? There is, in my mind, at least 3 different types of stablecoins. There's those that are tied to currency, and those can vary in different ways. There are those that are tied to virtual assets, which is a bit of a house of cards, to say the least. And then there are those that are tied to algorithms, which, my undergraduate's in finance, I don't have that much faith in the algorithms to keep them stable. And the SEC has determined that a lot of the underlying mechanisms are in fact securities, right? So they stabilize themselves with artificial stocks and bonds, which then have their own issues. But what I want to say is, more importantly, I think Libra is forcing the issue and forcing the various different central banks to drive forward as fast as possible, and perhaps even too fast. I think, based on some of the experiments I've seen in the Bahamas, it's not quite ready for prime time. And so, there's this rush to beat the Chinese to the digital yuan. But at the same time, I don't believe that the governments are necessarily ready to deploy and embrace it. I'm not sure that the Treasury knows how to manage a supply. At the same time, I don't know that us in this room are ready to make the break from cash and credit cards. So it'll be interesting to see how it plays out.
Yeah, I totally agree with all prior statements, and I think personally, not representative of Deloitte's opinion on this, I think that Facebook may not have been the best arbiter for this sort of attempt at a change or this product. So I think that definitely didn't help. But I think it's a good thing that this happened in the first place, because it's now got the conversation started, I think, following on what you guys were saying, with regulators and policymakers that otherwise didn't have an opinion. They now have to have an opinion. So it's not just the naysayers and the people who love blockchain. It's the people in between that are now understanding the definitions and starting to think about what that means for our society in general.
And maybe let me just bring this back to the database point that I started with. So I actually am one of those people who still carries some cash, not a huge amount. But we're so used to thinking about this as being money, and yet we all check our bank balance online now, and we see a digital representation of money. And having done some bank regulatory work in my day, right, if I have $1,000 in my bank account, it's not $1,000 of cash sitting in my bank account. right? That $1,000 is actually effectively me lending that money to the bank, and the bank, in accordance with banking regulations, has to maintain a certain percentage of that in its assets to cover the potential for default. So when we talk about stable coins, when we talk about digital money, when we talk about all of those kinds of things, we should just remember that we're living in a world of digital money and stable coins already. We're sort of putting new words here, and it's important to understand the different functions and features. Again, I know I've said that a dozen times already, but right, if we don't understand the functions and features of what our bank account is, we should. And similarly, the functions and features of Libra, whatever they're going to be, needs to be well understood, just like the functions and features of any other stable coin need to be well understood.
All good observations. Thank you very much. So now to the audience. We have a mic that will come to you. Okay.
All right, so my question is, from your perspective, how do you see technologies like blockchain potentially addressing wealth and income inequality? Are they going to accelerate it? Are they going to, act as a force that could potentially slow or reverse that trend?
That's asking for a huge amount of prognostication, but I'll take a swing at it anyway. I think one of the core principles, and again, I think Brendan talked about this morning, and so did Commissioner Pierce. I think one of the core principles behind decentralized permissionless blockchains is actually a huge amount of inclusiveness. Anybody with a computer and internet access can download the Bitcoin software or the Ethereum software or the software for the EOS public blockchain and start participating that way. So to me, that level of inclusiveness is a harbinger of the potential future that maybe makes for more wealth equality and participation and financial inclusion and just people having more control over what they're doing. When you think of the identity example, a friend of mine gives a great example about this. Matt Corva, who's the general counsel at Consensus, which is an Ethereum company, Ethereum-related company. He says, like, when you go to a bar and you get carded, right? This is a college town. People get carded at college towns. At least they did when I was in college. When you go to a bar and you get carded, right? You show your driver's license, and the bouncer now knows your name, your age, your address, and if they're really paying attention, whether or not you're an organ donor, right? Now, why does the bouncer need to know all of that information when really he or she just wants to make sure that you're 21 or older? And I think that's a great, it's a great point. Now, I'm 55. I don't get carded that often, but there are still a few bars in New York where they card everybody, and I tell the bouncer I'm old enough to be your dad, and usually I am. But think about that, right? Think about how I can maintain my privacy with digital identity so that it just shows that I'm 21, and that's all that the bouncer needs to know.
Next question, please.
Hi. So Lee, you're one of the few guys who've gone in front of the SEC and got a favorable outcome. I was wondering if you could elaborate on that a little bit. What was the experience like? Give us a little inside baseball on how you pulled that off. That'd be great.
Well, so I didn't pull off anything. I mean, obviously, it's a joint group effort, everything that gets done. I don't know that there's any inside baseball here. So I'm going to go back to my features and functions theme, right? Every situation is different, and I like to think that the SEC recognized the things that Block.one did and tried to do in connection with the token sale, and that's the underlying point about the settlement. Look, we're obviously happy to have that behind us. It's obviously great for us to move forward and start with some of the new product development that Brendan talked about and the other things. I'm sure Dan's going to have some great stuff to talk about tomorrow. So I'm not sure there's any inside baseball here, but again, focusing on what the situation is what should drive outcomes, and I'm sort of hopeful that that was our situation.
We have just about 1 minute, so if there's one more quick question, we could take it. Did I see one up here? Here, you can just yell it out if you want.
Yes, I have a quick question for John concerning regulations that you said was imminent in the next coming months, and for KYC for both parties and exchange of assets. How do you think that regulation is going to be received with regard to decentralized exchanges as opposed to centralized exchanges?
That's a good question. Just last week, we announced support for the Binance DEX, and so it is actually possible for distributed exchanges to be compliant. In terms of how well it's received, it depending on the entity, either embraced or kicking and screaming.
That's going to wrap up our panel. Panelists, thank you very much.